The crisis in Turkey is spreading. The contagion is making waves in emerging markets, causing major concerns for what's to come. The financial media has yet to acknowledge the bear market that banks are in, hoping that if they ignore it, somehow we won't notice. Sadly, the majority won't know what hit them. You came here for the truth, so let me unveil that for you. Today we're going to look at what's going on in Turkey, in emerging markets. We're going to cover China, taking a look at currencies, stock markets, and so much more. It's a jam-packed episode. I'm going to have to move through it really quick. Let's begin by taking a look at this. Turkish holdings of U.S. Treasuries have tumbled for a record 8 consecutive months. You can see it here on this chart out of Bloomberg. They have sold off over 50% of their treasuries in this short period of time. Look at where it has gone since 2015, clearly declining, reducing their amount of exposure, and for other reasons as well. I'm going to do an entire video on this, hopefully, if I can, to show you who's the buyer right now at this time, if all these countries are selling off. But I just wanted to touch on it lightly for a moment. A country in the crosshairs of American foreign policy has experienced a drastic decline in its own ownership of treasuries, falling off the list of major foreign holders of U.S. government securities. No, it's not Russia this time. It's Turkey. Okay, so more to come in another video, but I definitely need to cover it here. Look at the stocks in Turkey right now. The bank stocks are doing terribly, where you can see some examples, minus 28% and minus 24% in these cases here. It is widespread that's happening. Of course, they're concerned, especially because you have all of the debt that's been owned by them, perhaps is dollar denominated. They're worried about the contagion that's taking place for good reason, because it's not going to end well. And I'm going to assure you about that, all right? Turkey has the largest external deficit of any major emerging market country. Taking a look at this, on the left-hand side, you see Turkey, right beside that South Africa, and so on. There's different currencies here that we're looking at, but essentially what you can see is that they are going to have a very big problem because of the crisis they have been involved in. I mean, it's down 40% around this time. It's fluctuating every minute, but it's getting weaker overall. And despite the fact that we see both sides saying, look, we're going to fix everything, don't panic, it's never going to be right. And ultimately, something worse is going to happen. A crisis will have to occur before we can hit the bottom, and then we can make our way up. It doesn't ever fix itself, right? All right, high levels of foreign denominated debt do not go well with a large current account deficit. And you're seeing this here, different emerging markets, whether you're looking at Turkey, just incredible, 70% of the GDP when you add up all the different household and non-financial corporates, and you got your government, financial sector, add them all together. Look at, for example, just also wanted to touch on this, where it's very much so in Argentina. Look at this. The vast majority is government. Okay? You could just see how the total might be something, in this case here, about 70% for Turkey. But look at what it's comprised of. And I think that does make a big difference. All right? So just for your own desire, if you choose to look through that, major Turkish companies, financial institutions, and the government have at least $16 billion in bonds denominated in foreign currency that are due by the end of next year. That you can see right here. April 2019 is the peak, billions of dollars worth. And what will they do? How will they be able to handle this crisis that is coming? Are they going to be even able to survive until 2019 the way things are going? Their currency is rapidly depreciating and reminds me a lot of some other countries that we've been seeing. I've been covering Turkey recently, knowing that when you see something like this happening, it only spirals further down. The amount due by the end of next year is mostly composed of debt issued by Turkish financial institutions, including bonds at a minimum of $100 million at the time of issuance. Investors are watching closely to see whether Turkish banks and other companies will maintain access to their foreign funding they need to keep the economic activity humming as the country's currency plunges. This is going to be a problem. The government's going to have to step in and do things. But according to this individual here, the country's low public debt at 28% of GDP might be some comfort, and the country has the ammunition in the form of $98 billion in official reserves. Just like Argentina, they're going to wipe through those very rapidly. Don't worry about it. It will happen. They consider this not to be a debt crisis. It's only a currency crisis. Okay, everyone? Not to panic. Emerging market debt has ballooned since the 2008 global financial crisis on the left-hand side. You can see the blue line. That is the emerging markets. Considerable additions to their debt. And comparing that here to the so-called advanced economies have slightly declined. I think that's fraudulent anyway, but just looking at that, where we can see compared to China as well, who have been adding total, of course, a different story, but China is one of those who have been just adding considerable amounts of debt that I have seen throughout and documented here on the channel. On the right hand side, emerging market dollar debt has exploded, and you could see dollar denominated debt right here in the blue line just taking off like crazy. Okay, let's move on. Now this right here is switching gears into China. China's central bank bars some offshore lending in latest move to support the yuan. The capital controls only continue to just escalate. When I see this happening, I start to wonder, what are they up to? China has banned banks in its groundbreaking free trade zones from lending certain lending activities to ease the pressure on the yuan currency in offshore markets, and that's something that they're going on to doing. This is out of Reuters. If you're interested, there's a whole article about it, but it is worrisome to me to think about what they're planning on doing right now at this time. As far as I'm concerned, this is all intentional. If I had to take my best educated guess, the fact that this currency has been devalued has been intentional. All countries do it. They're doing it every day. Sometimes they do it a lot, sometimes a little bit, but they're doing it on a daily basis to be able to maintain the values that they desire. Each country is floating against another, one country's currency floating against another's. So obviously they're constantly trying to print money or loosen up, and they're trying to do this and maintain a certain value of it for their exports and so on. Well, I'll get to more of that in a second here. China's real retail sales are slowing far more rapidly than the nominal data suggests. Okay, so we can see where it has gone from, they're showing us from 2011, but even just since 2017 essentially until now, they have this rosy picture painted of how things are doing, but it's much, much worse. And the real data shows that we are around just over 6% here, retail sales year over year, whereas they're telling us it's more like 9%. Okay, and I'm sure the actual values are even far lower than that. So be careful the data that you're getting, okay? We only know a fraction of the truth, but at least we need to know that fraction. I mean, most people don't even know that. So we got to do what we can. And the best part about it is, if you are intelligent, if you are a wise individual that's looking into this every single day, you piece the information. You have all these little puzzle pieces, that fractional piece of data, but you put it together in your mind. And when you do so, you can start to see the bigger picture. The news media, they're never going to do that for you. Never. Okay? China's plan to tank their own stock market. You may know James Rickards, Currency Wars, famous book. He's made a lot of comments about China. He's said a lot of things over the years, and we'll see what's going to happen. I just found it interesting what he said here. When I say that the fix is in for FXI, it's not meant to be mysterious. FXI is the ticker symbol for a US ETF composed of the largest Chinese stocks. The phrase "the fix is in" simply refers to government-backed manipulation. When you combine the two in a government plan to tank their own stock market, at least to a point, you're as close to the sure thing as stock market indexes allow these days. That's exactly what's going on in China right now. And what he's suggesting anyway is that a currency devaluation will likely lead to a stock market collapse, but it's a trade-off China's willing to accept to allow a cheaper currency for better exports. This is what he's saying. I could definitely see where he's going with it. I don't have the proof on that, but I wanted to show you a high-level individual and what he's saying about what's going on in China today. And then we switch gears again to Venezuela. Swamped in inflation, Venezuela will cut 5 zeros from the currency. And they're doing this to avoid the wheelbarrow scenario. However, the currency doesn't have any value anymore. When you look at the average coffee is too expensive to purchase. So the individuals are saying, well, I'm not going to open up my shop. There's no point in opening up my shop to sell the coffee if nobody can afford the coffee. And it was as early as maybe a year ago, maybe a year and a half ago, I was getting comments from people telling me, well, I live in Venezuela. Everything is fine here. It's not so bad. It's not what I've been seeing. And I think perhaps that individual had a change of heart by this time. Because maybe he was doing better off than others. But at this point, I don't think anybody's doing okay. Chopping off 5 zeros will not solve anything at all. Nothing. What is interesting is to see what real assets are priced in a country that has incredible levels of inflation. Gold priced in the Venezuelan bolivar, 211 million bolivars. Today. This is just going from the beginning of the year up until today, up until July 30th, actually. It's incredible to see the devaluation, how just pricing it in gold to see where it's gone. Real assets are going to maintain value during an inflation. If it's a hyperinflation, well, that's something else altogether. But in general, if you fear that there will be inflation, then assets, not currency, is where you want to keep your money. When you have sort of fixed interest, it becomes a little risky because you're getting that fixed amount. And so you might think to yourself, well, 5% is great, but maybe 5% isn't that great in a few years from now, right? So it's hard to really be able to determine what exactly is the best. That's why I always suggest be diversified. It's really the smartest thing that anybody could do, is always to be diversified, okay? That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. And if you want more information, these two books have it all. These are the financial education that you were purposely not allowed to know. And it's pretty easy to understand it all because I removed all the jargon and I just broke it down so simply. Check it out at the link in the description below. If you're more interested in the audiobook, you can get that at themoneygps.com.